Let's dive into the jobs number. As we said, 336. We were looking for somewhere in the 150 range, Jim. Hospitality up 96, government up 73.
You can't stop this thing. Hospitality is very interesting because a lot of people feel that the travel and leisure bull market ended 2 months ago. And yet, it's just the analysts, because without exception, whether it be cruise, whether it be hotel, whether it be restaurant, the numbers are great. And everyone's just predicting, well, that can't last. It can't stay this way. And it's always the same litany. It's student loan. It's consumer strap. It hasn't happened yet. So what you're seeing are numbers which are still indicative of what the companies are saying, not what the analysts say the companies are going to say. And, you know, David, no gibberish here. This economy is so hard to kill.
It really is. You know, do you sell a strong economy is kind of the question.
Not if there's no wage.
I mean, we see what the impact obviously is, and we've got to keep a close eye, as we have for now weeks, on long-term yields, which are skyrocketing, and whether something may, as we like to say, break in the financial markets in some way that we're unaware of. But at the same time, I mean, the economy's really strong.
Right. I remember talking with someone, the CEO, the other day, and I just said, but if you knew that you would have really good growth without a lot of wage growth, I mean, that's called what you're supposed to be looking for. And so I don't want to look, obviously, when rates are where they are, the algos take over, and the algos don't sit there and think, well, listen, this is a nice economy. But the fact is that we've always hoped for this. So now we hate it. It's an odd thing.
I mean, yeah, one market participant said that's a tough narrative to get bearish on.
Right.
In the way. Now,
we don't
we're
get
seeing the reaction in stocks.
The algorithms say to get negative.
Right. They do. Because yields are moving higher.
Right. I mean, there's no...
And the chance of another rate hike seems to be higher now as well. And not to mention what the bond market's already done for us in terms of rate hikes over the last few weeks, really. I mean, that's been tightening of its own.
Exactly. Now, I think that there was a guest this morning whom I like very much. He said, listen, I've never really heard of a soft landing. It's always been hard landing. Well, he's been at it as long as I have, and I've seen a lot of soft landings. A soft landing is when you have still decent job growth, but there's no wage growth. And it just kind of tapers off, and it works. And that's what I think can happen. But a day like today, I look at where the bonds are, and I just said, well, you know, the S&P futures are correlated to bonds. NASDAQ is even more correlated, so NASDAQ opens down 1.25. And I'm not going to sit here and say, well, that's wrong, because it's going to open down 1.25. And who am I to say, well, that's just ridiculous? Because it doesn't matter whether I think it's ridiculous. The machines say it's not. They're not going to react to the goodness of this. They're going to react to the badness of it.
Right. A household survey was a lot lot
Yes.
Just south of 90K. Is that worth taking into consideration?
I guess so. I don't know. Then you get the revisions. Look, I just come back to just saying that if you think that this economy is being slowed at all by what's happened in the short and long, I think that's all that happened. I think we've had new people in the labor force, but they're not able to get more money. By the way, I mean, look, we know that the UAW is going to cause a huge problem. So, I mean, you could look at that and say, well, UAW, but this doesn't include that. This includes, like, nothing that was negative and everything that is positive.
So you think it might be the last barn burner for a while?
I do think it is, because Sean Fain is going to give you his update, and he's kind of the secretary of everything right now. And David, you know that the UAW has they have more than 100,000 workers, but the ripple effect is very big.
Yeah.
It's just that I just can't believe the hospitality index, that they keep hiring. They should be not hiring, given the fact that they're supposed to have bad numbers next year. But
well, maybe that's not going to be the case.
Well, I mean, look, when you're with Marriott, like Marriott would say, what's with the analysts?
Right.
Our numbers already, but the cruise lines, our numbers are great for next year. But the analysts just say that's not going to happen.
Well, the airlines have pointed you directionally, right? I mean, but that's been about fuel. And by the way, S&P Energy on pace for the worst week since May.
Gasoline's coming down. I mean, look, if you did not have the bonds, you would say, oh, look at this. We've got really good job growth, but not a lot of inflation. David, you got to buy the stocks.
You would say that.
Right, but the machines don't let it happen.
Well, you're really just going to blame it on the machines? I mean, there is the idea that obviously when you're getting to close to 5% on a 10-year now, right, that is going to have a significant effect eventually in causing significant slowdown.
Well, it's a Jamie Dimon market. I mean, remember, he said, get ready for 6, maybe 7. And look, they have to have 1 or 2 hikes, right? Because they're not going to get they have to hike later. I think that we're kind of hurt by, there were some people, there were some Federal Reserve people who said in the last few days that, it's cooling.
Man, that was the trade right there of the year, though. Short the 10-year 6 weeks ago. I don't know.
Okay.
You're up. What are you up?
It makes you wonder if that's going to show up in J.P. Morgan's earnings in a couple of weeks. Yep.
But the bank stocks are so bad, and we know that they have all these held-to-maturity portfolios that are awful.
They're awful, but they're held to maturity. So as long as you hold them to maturity and you don't have to worry about some sort of
Silicon Valley
then
Bank
you're
thing.
fine.
Wow, David, you were just... Holy cow, man, you took happy pills. It's terrific. I feel great.
You do?
No, like a Bears fan or something?
I did not take happy pills.
No, you just made me feel terrific. You made me feel like we ought to go buy it.
Well, Jim mentioned some of the Fed speak. Daly did say yesterday that the tightening we've seen in the last couple of weeks probably worth at least one hike. And then she talked a little bit more about economic conditions. Take a listen.
If financial conditions, which have tightened considerably in the past 90 days, and if they should remain tight, well, then the need for us to take further action is diminished because financial markets are already moving into that direction and they've done the work. We don't need to do it more.
Well, I think that what we're seeing is that the financial markets may be doing that, but the small and medium-sized business people, as represented by Paychex, which is the payroll process for them, yeah, I had John Gibson on. He just said, look, business is pretty good. More people being hired than bankruptcies. It's really great, and wage growth not exactly what you thought, but there's a lot of businesses being created. I mean, the small and medium-sized business is not listening to the Fed.
No.
They're listening to demand.
How much do you think this move in rates is really basically taking the onus off the Fed to do anything?
Well, I think that what they cared about the most was that the endless increase in housing, 40% increase since 2019. Well, I don't know. What do we have? Mortgage rates will be like 8.25%, and that's just make it so that your home, you can't afford a new home. It's really like the interest for mortgages. I don't want to make it seem. I mean, my first mortgage was 12%. So you have all these older people that come and say, well, I remember when it was 18. But the fact is that all that matters is where it was versus where it is. And if it was at 3.5 and now it's at 8, then you're not going to be so happy about paying for $1 million house for Toll Brothers. You're going to say, wait till it comes down.
Remember back when we were in that period where Buffett would say the best investment, he was always asked, what's the best investment? 30-year fixed. Because he remembered, as do you.
Yes. And yes. What a great investment. Look, I think that in the end, every single input that has been a thorn in our side, whether it be housing, whether it be oil, is diminished. So I think if I were the Fed, I'd say, you know what, it's going our way, but not yet. Let's do another hike. Let's see how it goes. If we have an extension of the UAW strike, which I'm focused on because it seems so ugly.
Yep.
Then you're going to have a lot. They still have inventories, but when those inventories go down, they can't rebuild them. It's going to be a considerable part of the country that's kind of just taken out and shot.
Really quick, Jim, will you ever pay attention to ADP again after this week?
Who's ADP? What's that? ADP? I have him in my fantasy league. I'm going to drop him.